This perfect crypto trading strategy makes it nearly impossible to lose. Now I know what you're thinking. Krush, that sounds like clickbait. What's going on? Well, let's watch the video. Let's look at the context of the Bitcoin chart. Let's see this strategy applied throughout the entirety of this year. And you can see for yourself how effective it would have been. We're going to start with a clean chart on the Bitcoin weekly. 2022 was an extremely difficult year to trade. We had one sharp move down like this, and then sideways chop for the entirety of the last half of the year from June all the way till November, December. And the start was also very choppy, sideways, slightly up. Very difficult to make money in this area and this area over here. You could have caught a few big moves on the way down over here. Even this was pretty difficult to trade. Now this year has actually been really nice to trade. Why is that? Because if we go over to the daily, it becomes a little clearer. After a long period of going sideways like this, price dropped, and here it had two choices. Price could have gone above or below the two levels I've highlighted here. Below, and we would have headed down to the next support, which if we zoom out is around about 12k over here, and I fully believe we would have reached there should we have lost this level. 12k is the next logical place for price to go. Don't get mad, it's a possibility, it can happen. If 100k is possible, 12k is more than reasonable for us to go to. But instead, we actually broke this 18k level here, and then secondly broke the 21k level here. Both of these indicated a big shift in trend. You see the structure, this entire period was heading down, and then here we started flipping that. For the first time, price started a new structure. And you can see the moving averages confirm this. You take a look, pretty much at this point here, which is confluent with this, we saw a big shift in trend. Price started really shifting up. And some of you will have noticed the opposite has just happened here, but we'll get to that. So big shift in price, and what this gave us was just fantastic opportunities to keep catching great breakout plays. Every single time price made a major breakthrough, we got a huge trading opportunity to the upside over here. This lasted from the start of the new year all the way till February. This was great. Then we had a very clean move down. Again, another great trading opportunity. Not too much chop, not too much side to side. Then another really clean move up all the way to 30k. This was a little difficult to trade. This was nice to trade. This has been a little difficult to trade. This move was very hard to catch because of how quickly it happened, and now we're going sideways. So why were these earlier moves very easy to trade? Because the market structure was so clean, and we just had very clean trending price movements. We had a high and a low here, we broke the high, price goes up. And then where do you expect price to go up after it starts moving? Well, you'd presume this resistance over here, because it's the next most obvious one, at about 21k, just above. And we go straight there. And then price goes up. And where would you assume the next resistance to be? We'll just look clearly here at around 24.5k. We get rid of this. We stop just below. Price comes down, hits this previous resistance, acts perfectly as a support, goes back up, hits the resistance perfectly, and then starts its way back down. Now this support didn't hold. We had a small deviation, but then go into a clean move up. Where do you expect price to stall? Here at resistance, and it did stall. And then zoom out. Where do you expect the next key resistances to be? Well, you've got lower bound of this range here, you've got upper bound of this range here. And what happens? Price goes straight into the expected resistance, predictably. And this isn't just me saying this in hindsight. You guys can scroll back to the videos I've been putting out since the start of this year, calling every single one of these moves. And that's not because I can predict it magically. No, I can't. I'm wrong all the time. But this was a very easy move to trade. And several traders were talking about how they managed to outperform their 2022 earnings just in this start period of 2023 because of how clean and predictable these moves were. And then price goes up, doesn't quite hit the resistance, starts chopping around this level, comes down, and look, same at that predictable support, it goes back up, hits the resistance, and then it starts to get very tricky in this area here. From June onwards, stuff started to get a little bit tricky, and this move down here, you had to be very, very patient to play it properly. So all that information gives us the context we need to understand the right strategy. See, there's this misconception new traders have where they think they have to be always trading. every single time the price goes up and down, they think they need to buy here, sell here, buy here, sell here, buy here, sell here, buy here, sell here, buy again on the way down, sell here, buy here, sell here, buy, sell, buy, sell, buy. And I can keep going with this. They have this feeling that they need to catch every single micro movement of the price. But in reality, trading doesn't look like that. In reality, what you need to do in order to make money is nothing here, buy around here, sell around here, buy again here when the price is going up, sell around here, buy again here, sell around here. Now, notice how there are really, really long periods of time where you do absolutely nothing. Here, from April through to June, you'd have done nothing. Absolutely nothing. And that's okay. That's a part of the game. And in fact, you get to do less and make more money. Who doesn't want to do less and make more money? Now, how do you identify the periods where you get to do less? It's one, about understanding market conditions, and two, about understanding your risk to reward ratio. Now, there's a lot of misconceptions about risk to reward ratio, so I'll explain that in a second. But first, market conditions. This is something I've spoken about a lot, and I'll link to a full guide in my Telegram where I go into a lot of detail on this. You can click in the description below to go there. But I'll briefly explain it here, just using moving averages. We've got a few different types of market conditions. We've got 6. There's sideways, sideways volatile, down, down volatile, up, and up volatile. You need to know which ones you do well in and which ones you do badly in. Moving averages are a great way to identify the market conditions. They're a little bit lagging, so hopefully you could have identified here, if you understood market structure, that we're swapping into an uptrend instead of waiting for this big crossover over here. You see, this is where it shifted. This is where the indicators told you. So there's definitely a lag to this. Again, you can see here that the market structure indicated that the downtrend has officially happened here around August 24. So moving averages has told us, okay, we're in a downtrend now, or at least we're no longer in an uptrend and we're about to start going sideways. But if you understood the market structure, you would have realized that earlier. Let me show you. See, in a strong uptrend, every subsequent high has a sharp move up. Look at the angle and distance moved here, the angle and distance moved here, and then the angle and distance moved here. Notice how the trend, as clearly as that, has shifted. We've gone from sharp up, another sharp move up, to barely making our way up. And also, notice that we made a low here, we reinforced that low there, and then we chop through it. That shows me that the trend is weakening. Even though we did the same thing here, it was extremely sharp. Price came back down, buyers immediately stepped in and pushed the price back up. Do you see the difference there? So that was our first sign that this was weakening. And then the second was just this slow, choppy, low volume move down straight into this resistance and a crash through it. Every time price touched it, it started to go up less and less, and buyers were not stepping in and pushing the price up. We kept going sideways quietly. We made our local top here, barely broke it, another local top there, and price has now come back down. So the trend seems to have reversed, and at this point, it is either going to be neutral or the downtrend will continue. If we break up above this area here, the price is consolidating. A breakout to the upside would take us into neutral territory, where we start going sideways, and I'd assume this range will start establishing itself. A break to the downside, and we move here to test this resistance at 24.5k, and if we lose that, we can catch a nice short all the way down to about 21.327. Now, this entire period here, I barely took a single trade. The second we lost this level, I stepped in for my trade. This entire period here, I took a few trades, not many. A couple times I bet on continuation to the downside, but nowhere near with the conviction and size of my trades to the upside over here. Then again here, on the breakdown, I was looking for opportunity. Now, how do you spot the right opportunities? Why did I know not to take trades here, but to take trades here? I'll explain that right now with a perfect example. So when price is over here, you've got two options. You can either long or you can short. Now, the closest resistance is here at 31k. And I don't know about you guys, but the uptrend has weakened. We've gone sideways. We've gone straight back up into this resistance, and price is now going sideways. I don't want to long here because there's resistance right up here. I would rather just wait 2 seconds, miss out on a bit of the move, and catch it the second we get above. So longs didn't make sense at all. Next, shorts. Now maybe I could take a short from here and try catch it all the way down here. However, I know from experience that when price starts going sideways like this, it gets really choppy. There's a lot of wicks that go up and down and try to stop you out of positions when you go into them, and the moves never look like this. They always look like this. And I did not want to get chopped up in here, and I did not want the mental energy it would have taken to manage that position for such a long period of time, hoping to catch my shorts. I would have rather gone and found high volatility altcoins if I was that desperate to trade these conditions, which a lot of my students have done and they've absolutely killed it on it. The other thing is, what if this area here acts as support? Like we're right next to 30K, which is the big psychological level. And then here we've got some sort of soft support. So I don't know where price is going to land. I'm expecting chop and noise. However, once we break below this level here, now buyers are going to start panicking because we've confirmed these tops. We've lost market structure here. We've lost another key structural level. And that indicates to me confirmation. I've got a hint that we're entering a downtrend because of what I explained before, the change in gradient of the move up. Now this would confirm it to me, and I expect a sharp move down to 24.5K with support also at 27.2K that I'll be paying attention to. That gives me a really good risk to reward ratio, which is what I wanted to talk about next. Remember, I take my long here. My first resistance is right here, and I'm looking to get chopped out. I don't really have a good logical stop. At best, it's looking something like this, which is a really ugly trade I don't want to be taking. Now, if we were to catch a move on the way down, set my stop loss there. That's 1. And we hit this level here. Doesn't look as good, but I've got several other confluent factors with market structure telling me that this is going to be in a downtrend, and I'd be targeting all the way down to 24.5K and just assessing the price and managing my position around 27.2K, and of course I'd try enter earlier if I could. Now this makes a lot more sense to me. The risk to reward makes sense. The support here is not as strong, and we're building momentum to the downside. So I know I don't want to trade here. I know I want to catch a short here. I know I want to catch a long above this level here. And that's how I know. Oh, I'm glad this happened because I forgot this happened here. See, this little wick here, these big moves up, even if you knew you had to short here, if you had your stop loss at the highs, you'd have lost it. Even if you had your stop loss a little bit above the highs, you would have lost it. And I know the market does moves like this when the conditions look like that. So I don't want to enter that short. And again, imagine you're holding that short. It comes all the way down here, hits this level. Maybe you take profit, in which case it's a really tiny short that you had to hold and manage for ages. Then we get little wicks like this that are really, really annoying. But when price breaks down, it's sharp, it's quick. You enter the position, you exit the position. And if you were targeting here, but price is floating here, maybe you exit. Now, if you have a system, you've tested, you know exactly when to enter and exit. But the point is, you can manage your position, do what you like. And now, here again, there aren't any good trades to take. So now, let's talk about price over here. We've got our resistance and our support. We break above the resistance. There's a potential to long. I don't really love it because we've got resistances here and the trend really is confirmed to the downside right now. And once we get up here, we start getting into sideways conditions, which I know I don't do well in. But if we continue downwards, then those aren't sideways conditions. I know the conditions I do well in. Risk to reward looks good. While we've got resistance here, once that breaks, we're looking at a steep drop all the way down to 21.327. If you like this sort of analysis combined with education, let me know in the description below and I'll try and make more videos like this. That's everything from me for today.